In this video, I'm going to demonstrate how to use an advanced accountancy feature which allows you to defer purchase invoices. I encourage you to speak to your accountant before doing this, so I'm going to show you how to do it, but please, before you do it, just speak to your accountant and just make sure that they're okay with this. So the scenarios in which this is used are when you receive an invoice upfront, which is typically going to be spread out across the year. And instead of doing journals, there's a way in Garage Hive that you can set a deferral on a purchase invoice, and it will split the costs over a defined period of time. So I'm just going to show you how to do this from a purchase invoice. So I'll go purchasing, purchase invoices, and I've created a demonstration invoice, which I'm going to open. Now, to use this feature, we need to enable a column called deferrals. So to do this, you need to go top right hand corner, settings, personalize, add field, highlight the line section, search for deferral code, and then simply drag it down and place it on the document. I like the deferral code to be at the end, because to me it makes more sense to be at the end. And then simply select done. And now I have the deferral code column, and now I can use this feature. So you can see here, it's just a typical invoice to a vendor for the local council. I'm posting straight to the GL account, which is when this feature will be used, and I'm posting it to business rates. And you can see it's a bill for £9,000 upfront, but I'm going to be paying this over the next 12 months. But regardless of when I'm paying it, I could be paying it upfront in one lump sum. I want to split the costs over the 12-month period, so my profit and loss is more accurate. And to do this, I've created a deferral code. So I'll just go ahead and show you how this is created. If you don't have any here, select the down arrow and select new. And I'm going to go ahead and open this card so you can see what I've done. So first of all, you have to give it a code. So the code is, in this case, 12M. The description is 12-month deferral. And then you have to select deferral account. So when the invoice is posted, it has to debit and credit various accounts, but one of those accounts is a deferral account where it's going to put this revenue temporarily and then each month journal it back out. In this case, on most of your systems, you will have a deferred invoices account, which sits on your balance sheet. Again, if this is not set up how your accountant wants it to be set up, it could cause you issues. So just please confirm this with your accountant first. In this demonstration, I'm going to use the deferred invoices account as my deferral account. And then you have what's called your deferral schedule. So this is how you expect the costs to be split over the defined period. In this case, we're obviously splitting it over 12 months. So you can see the number of periods are 12. The percentage is 100% over 12 months. I want an equal amount per period. So I'm saying I'm splitting this evenly across each period. You have other options here. The start date will be from the date I post the invoice. I could go from the beginning of the month that I post the invoice, or the end, or the beginning of the next month, because we've said that the periods are going to be monthly. In this case, we're going to go posting date. And then you simply just give it a description. I believe this is just the narrative on the journal. Yeah. Okay, so that's the deferral setup now, and you can see that I've simply, on this line, I've selected that this is the deferral code that we will use when I'm posting this invoice on this line. You can have multiple deferral codes on an invoice or just some lines with deferral codes. Now, what I strongly recommend that you do before you post the invoice is actually preview the posting. So under posting, select preview posting. For those that aren't used to using this feature, I highly recommend, if you're using an accountancy and you're posting something that is new, always preview the posting, because you can understand how it's actually hitting the ledgers. So if we take a look at the GL entries, I'm just going to talk you through what we see here. So these are all of the entries. So you can see, instead of it just being a very straightforward transaction, you can see there are loads of entries, and you can see what changes on the entries are the dates. So if we look at what's happened here, it's debiting the business rates account and then crediting the business rates account. So it's putting it in and taking it straight back out, and then putting it into the deferred invoices account, the deferral account that we set. If you look at the bottom here, you can see that it's also going against the vendor because we do owe the customer the money. No, we want the invoice posted against the vendor on the first month, so you can see the liability against that particular customer straight away. It doesn't slowly build up the liability, it adds the liability from the minute you post the document against the vendor. And then you can see what it's actually doing through the months is it is reducing the balance in the deferred invoices and then debiting the business rates account on your profit and loss. And then it's doing this every month. So you can see as the months go on, it's actually it's split this amount out here across all of the months because we said it was going to be every month for 12 months. It's split it evenly across the 12 months and posted it. So if I go look at my profit and loss now, I will actually see this cost split against all of the future months. So it's successfully deferred the invoice. So I can just go ahead and post the document. And what I'm going to do is just go and quickly take a look at the chart of accounts. I'm going to search for business rates. And we're going to, you see the full amount is sat in here. But if we go in, we'll actually see that it is split between all of the future months. So that is how you use deferral codes. You have the option of any time period, and you can do a reducing balance or a split balance. So it's a great feature, very useful to set up, and it just results in a really neat profit and loss with very low effort because you just set the deferral code and the system does the rest for you. So if you have any questions, then please let me know. Thank you.